Hello, crypto bros, and we have some news for you. The dumping might be stopping soon because the Bitcoin miners might be weary of dumping. They've been selling out for quite a long time, basically all year, and the reserves are getting a little bit lower. So, based on that, we might actually have a lack of supply and more demand soon as the ETF comes in. Remember, before we go on these numbers, that about pre-halving, about 900 Bitcoin are mined each day. That means 6,300 Bitcoin each week. And if you look at this news report right here, miners offloaded $5 billion in Bitcoin over the last week alone. And that's 110,000 BTC, about 15 times what they mine. So that's why the reserves are getting a little bit lower. So there was a much anticipated surge in the price of Bitcoin following the launch of the spot ETF. It went to 49K, but then it dumped to 41K almost, and that's probably because of the massive offloading. 2 days prior to launch, Bitcoin miners sent nearly 50,000 Bitcoin, or worth roughly 2.3 billion, to exchanges. On January 11th, when the ETF started trading, miners sent an additional $60,000. So that volatility of that sell down from roughly 49,000 to 41,500 was probably somewhat of selling of the 110,000 BTC. And you saw some of the dumping afterwards, all of a sudden by 200 points. But by 2,000 points, 1,000 points, that was probably some of that sell off as well. So we do have like a much better reason now why they actually sold off so much, because the miners transported over 100,000 BTC and they dumped it over the course of last week. Now it's gone back to around $43,000. I don't really know if miners are going to dump anymore, but they might be running a little bit short on reserves because, as you can see right here, throughout the year, starting in January, they had 1.85 million BTC in reserve, and now they only have 1.829 BTC in reserve. So they've dumped a lot of coins in that time period. Now the miners will always have like a bottom level reserve. So, this decrease might signal that we're kind of at the end of the dumping. Obviously, you see the last week it goes up and down, buying and selling a lot. But overall, the trend has definitely been down since October, since the price has actually been increasing some, or since there's been more activity. Miners are wanting to cash in. They're probably doing like a pre-halving cash in, because after the halving, they might find it hard to actually stay in business as the hash rate actually increases. But they've been selling off more and more, and they specifically been selling off like right towards the ETF. But despite that, prices have actually remained pretty constant after that run up into the 40,000s. A lot of miners have been taking profit in the 40,000s, and they might actually be running out of steam to actually sell Bitcoin with. At least that's what we hope. You can see, like, even before the new year, on December 29th, they offloaded 129 million Bitcoin in a day, which is way more, several times more than what they actually mined. So this is like from more than half a month ago. Crypto miners' Bitcoin reserves slid to the lowest point since May following the spate of withdrawals last week, a sign of mounting selling pressure as the largest cryptocurrency posts a December gain of more than 13%. So despite this massive selling pressure by miners all throughout December and January, the price has stayed fairly consistent. And it's gone through the buy the rumor, sell the news thing. And now we have pressure from these ETFs buying it up. There might be some continued selling through the halving, but I think we've actually gotten through the bulk of it, as some of the miners already capitulated, already dumped all their Bitcoin on the market, and the price still hasn't gone down. So we've absorbed, I think, the majority of the miners' sells through September and through January, especially last week during the ETF, as BlackRock, Fidelity were more than happy to lap up any Bitcoin that those miners actually left behind. So reserves are 1.832 million BTC held by miners, down from October's high of 1.845. So that might not seem like a lot to you, but they went down by like 13,000 BTC. Remember, miners are getting more each day. Different ones are selling, but they have drained their accounts significantly since the middle of this year, like the middle of this year. And that's when like we were dumping. They were the highest because they didn't want to sell at prices. But now they're actually being forced to sell as we get closer to the halving. And as prices gone up, they can actually cash in a little bit on their buys and sells. So I think that like some of the dumping pressure might actually be being absorbed by the ETFs, because otherwise I think the increased dumping pressure over the last few months would have actually resulted in a Bitcoin downfall, but it's actually resulted in a Bitcoin price leg up more or less. So I really like that as a fact, because like once the reserves get lower, they are less likely to dump. Like some of the ones that are dumping or that haven't dumped probably are like long-term miners and holders looking at least for a market top. And if they haven't really made a move by now, they probably don't think this is the market top for Bitcoin. So right now, I think some of the mining pressure might actually, some of the mining pressure definitely might be subsiding, and we could go up after a couple of weeks. Now, there's probably still some miner sales going on as we get closer to the halving, but I think like the majority that actually wanted to sell at ETF have already sold at ETF. So that's some good news for Bitcoin, that we've absorbed over 100,000 Bitcoin being dumped by miners in less than a week, and we've absorbed like maybe tens of thousands of more net negative outflow from Bitcoin miners on sells throughout December. And if you're wondering why late December and January we haven't really gone up much, that's probably why. There's a lot of selling pressure now on Bitcoin from these mining from the mining people. So in other news, there's a crypto think tank that has actually counterpunched on Elizabeth Warren. Elizabeth Warren wrote them some questions. They're like, nope, we don't have to answer any of them. You're a bitch. Don't talk to us. That's basically what they said. Well, they didn't exactly say it in that way. They were a little bit more diplomatic. But if I answered them, that's what I would have actually said. So basically, Elizabeth Warren, our great and glorious senator, voiced some concerns that the Coin Center think tank was amounting an army of ex-government officials. And they're like, nope, it's freedom of speech, and you can't do anything about it. So like she was worried that they were flexing a not-so-secret weapon by amassing what she considers a small army of former ex-government officials. But unfortunately for her, ex-government officials can do that kind of thing. They can actually go work for industry afterwards. I don't really know what I think about that overall, but it's allowed, so you can't just be like, it's crypto, you can't do it. Other industries, that's perfectly fine. And after she asked these questions, they said, with respect, we have no obligation to answer these questions beyond the public disclosures we make under the law. Coin Center affirms that it takes constitutional rights seriously and considers that free speech and petitioning of the government are fundamental rights protected by our Constitution. Warren's letter discourages participation in important public policy debates and chills these rights. Regarding its opposition to legislative proposals such as the CANSI Act and Digital Asset Anti-Money Laundering Act, which are acts that Warren really wants to get passed, but I think she sees that there's not enough support in Congress. Plus, like all the lobbyists that have actually gathered against these acts make it much, much harder for her using the lobbying money to actually get some of the pro-crypto stuff through, and she's probably feeling the heat, but they're like, nope, we're not going to answer you. We disclose what we have to under the law. And of course, they're going to oppose these legislative efforts because they think they are unconstitutional, and they might actually be unconstitutional. And of course, Warren actually highlights the abuse of the revolving door, which is like, officials leaving government positions to work for companies, much like how Jay Clayton left the SEC and worked for an Ethereum affiliated company after suing Ripple. So I don't think she mentioned that one specifically. But, it's not like the politicians on her side haven't abused this as well. Elizabeth Warren hasn't, because she's been a senator for like 30 years. So she's stayed in Senate and gotten those benefits. So Coin Center is basically roundhouse kicking Elizabeth Warren in the face on her questions. And basically, like, what she wanted was to provide a list of former government officials employed by the crypto think tank. And they're like, nope, we do not need to tell you anything. And of course, they want to engage her in respectful policy decisions, which she will obviously refuse because she will not be actually able to argue against them or debate against them. So she is getting a lot of pushback from Coin Center. And yes, there is a small army of former officials that are on our side. And she is very, very nervous about that because there might even be some ex-SEC officials that are on CoinCenter's think tank and team. Last of all, SBF, the glorious Sam Bankman-Fried's parents, have sought a lawsuit dismissal. So obviously, like, the lawsuit wants tens of millions of dollars from SBF's parents, and they're like, we shouldn't have to pay because we weren't directly involved in SBF's activities, which is obviously a lie. And I think they should have to pay every bit of it back. And this is a clawback lawsuit saying that they have to pay back all the benefits they got from SBF, which they obviously should because they were very, very much vested in helping SBF scam people at the time. I do believe his dad got like a huge salary. His mom got benefits too, and those benefits should be clawed back because they came from the pockets of customers. It's bad enough that that FTX wants to pay back customers based on the past low price of Bitcoin rather than right now, but not clawing back the funds from their parents, that'd be like an extra slap in the face. So basically they're saying the claims against Mr. Bankman and Ms. Fried should be dismissed pursuant to Federal Rule of Civil Procedure and Federal Rule of Bankruptcy Procedure for failure to state a claim. And of course, they've been trying to claw back millions of dollars in cash and gifts from the pair, including 16.4 million villa in the Bahamas. So the thing is, like, they use company money to buy these things. They should be able to prove these things and trace the money, and the parents should be forced to actually give these back. So there's a big problem with this right now, and I think, like, even criminally, these guys should be able to be prosecuted because they were definitely involved in SBF's operation. We have a letter about SBF's dad, arguing that he was not getting paid enough from SBF to do the things that he does. So I don't think they should get off scot-free. They should definitely have to pay people their money back. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.